Hi, Managerial Accounting for Decision Making. This video is going to be not crunching any numbers. Other videos where I will be showing you how to do the problems, I will show you using a whiteboard, but this video is just going to go over the definition of managerial accounting and explain to you the difference between managerial and financial accounting. So again, I'm going to have different videos for these different slides. So the first 7 slides will be in this video. Okay, so let's go over managerial accounting, the basic definition first. Managerial accounting is going to help managers make better decisions. It's broken out in 3 main areas. So there's planning, there's directing and motivating, and there's controlling. Planning involves selecting a course of action and specifying how the action will be implemented. An important part of planning is to identify alternatives and then select from among the different possibilities the best course of action to further the organization's objectives. Once alternatives have been identified, the plans of management are often expressed formally in budgets. So we will learn about different budgets in this course. Budgets are usually prepared on the direction of the controller, who is the manager in charge of the accounting department. Typically, budgets are prepared annually. However, with managerial accounting, they can be prepared at any time. It's when the manager asks for one. The next important aspect of managerial accounting is directing and motivating. Managing the company's operations and leading the organization to achieve its objective. Motivating employees by making them part of the process. So get the input from the employees who are actually going to be doing the job. Enabling them to see their progress so that employees feel that their efforts make a difference in the company's direction. Controlling is just going to evaluate the results of the business operations and making adjustments as needed. So maybe deciding to get rid of a product, maybe deciding to get rid of a supplier, something along those lines after they've analyze the different reports. Next aspect I'm going to go over is the difference between managerial versus financial accounting. So managerial accounting, you don't need to use debit and credit as much as you do in financial. However, we will learn some journal entries in managerial. But for the most part, managerial is its own segment. So managerial is used by internal users, management, the supervisors, even the president of the company. They're looking to see what is going on in this particular segment or what's going on with a particular product. Whereas financial accounting is mainly for external. However, financial accounting, so the external users would be investors, banks, creditors, but the internal could be employees. So employees could look at financials to learn to see, hey, if we're going to have a layoff or, different reasons that employees could look at the financial statements. But one more time, managerial is internal only, whereas financial is primarily external, but it could be internal as well. Management, another distinction accounting. Managerial accounting does not follow GAAP, generally accepted accounting principles, whereas financial accounting absolutely has to follow GAAP and IFRS. So GAAP is generally accepted accounting principles. IFRS is International Financial Reporting Standards. Managerial accounting, another distinction, will look at a small piece of the business. So the manager could ask the management accounting, I want you to look at this segment of the business. I want you to complete reports for this business segment. Financial accounting reports on the entire business. So they are going to complete financial statements, oftentimes consolidated. It's going to include every segment of the business. So financial reports on the business as a whole. Managerial just looks at one piece of the pie of the business. Managerial reports are generated as needed. So whenever the manager or the CEO of the company wants a particular report, well, that's when it's generated. Financial reports are required either quarterly or annually, so they do not have a choice. They have to report those financial statements on a quarterly or annually basis. Managerial accounting is focused on the future. So a lot of times you're going to have hypothetical situations, forecasts. You're going to look at those numbers to see a what-if situation, whereas financial accounting is focused on the past. So financial accounting, you're going to report on just maybe, for an example, if it's a calendar year, you will report as December 31st, so you're going to go all the way back to the beginning of the year. So financial reporting is focused on the past. Managerial accounting is not bound by an authority body for its reports. Okay, so it's not bound by an authority body for its reports. So that's why you can't just call up Coca-Cola Corporation and say, hey, I'd like to see your managerial accounting reports. They're going to say, no, you cannot see those. Whereas on the same token, financial accounting is bound by the SEC. So the SEC requires all public companies to report their financial statements to them, and they post them. So you could see Coca-Cola's financial accounting information. It is bound by the SEC. However, the SEC passes it off to the Financial Accounting Standards Board, and they are in charge of GAAP. Okay? Managerial accounting does not require external auditors, so you don't have to go in, and an auditor is not going to look at managerial accounting reports. However, financial accounting does require external independent auditors who need to express an opinion on the financial information. So those external auditors will get those financial statements. They will not get the financial accounting, the managerial accounting reports. Okay? Another distinct difference, managerial accounting information must be relevant. It has to be relevant to the users in order to make decisions. Financial accounting must be reliable and objective. Another distinct difference that I do not have in my slide, but I just want to talk to you about this, is managerial accounting is going to look at qualitative information, whereas financial information will look at quantitative. Qualitative is going to look at surveys, it would look at focus groups. So it's going to report or interview particular people in different areas, whereas financial accounting is quantitative. It's just the numbers in the business. And that's the difference mainly between managerial and financial accounting. We're going to learn more in this week, but I wanted to break this video up so that it wasn't too much in one. Okay? So I look forward to seeing you in the next videos.